Alright, quick update on Bitcoin. So, we are breaking the bullish market structure that we've been holding since this started trading 13 years ago, which is pretty brutal. Let's jump right into today's video. So, as you can see, I'm sure a lot of you have already looked at the charts and have noticed that Bitcoin is currently capitulating below its previous all-time high back here in 2017. Now, why this is so important is because this is not something that we've done before. If you look at the chart, you'll notice we have a arrangement of horizontal rays that are both green and red. The green horizontal rays mark the previous all-time highs from the past 1, 2, 3, and I should probably put one up here, the past 4 cycles that we do have over on Bitcoin. And the red lines mark the cycle lows. So if we look back at what happened, you can see the 2011 bull run. We came all the way up, had an all-time high, came back down. This was your cycle low. What happened next is, we came up, made a new all-time high, and very importantly, when we did make our next cycle low, we made it above the previous all-time high. Moving over into the next cycle, we obviously broke up, made a new all-time high, marking this green horizontal ray above this one, and we came down, red line down here, marking the cycle low. As you can see, this was the previous all-time high, this was the cycle low, and once again, you never came back to that previous all-time high. But what are we doing at this moment in time? Because you can see, we came down, December 2018, came down, made the bear market low, we ran up, broke above the previous all-time high, made a new all-time high, and if we were following market structure, we would have bottomed already. But as you notice, this is from where we are at this moment in time. Previous all-time high is actually starting to push down. So I did just want to give you a quick update letting you know this. Really not good in my opinion, and once again I've been saying this in my past plethora of videos, I've been talking about it in my streams, but I was saying I was here in 2018 for this bear market, and what I've been saying is, if you are living through this bear market at this moment in time, yes, in terms of percentage drops, it may not be as bad. Obviously, we can't celebrate the percentage drops at this moment in time because we haven't had the entirety of the cycle play out, or at least we don't know if we've had the entirety of the cycle play out. This was an 84% drop. And if we mark what we've got going on right now, this is a 72% drop. Bear in mind, from the previous cycles, we have pretty much experienced diminished returns cycle over cycle over cycle. So if we look at this from the previous all-time highs down to the low, first cycle, this was a 94% drop. Next cycle was almost an 87% drop. Cycle after that, about an 84.5% drop. So, according to the law of diminished returns, we should be bottoming before an 84% drop. Now, like I said, if you were back here in 2018, then you know that, a lot of the markets were very shaky back then, but we really did not have, the inflation levels. We didn't have stagflation. We didn't have the Fed constantly increasing the interest rates. They've been increasing the interest rates higher than, my entire lifetime. So, and I imagine most people's lifetimes, as well, if you're not, more than 30, 40, whatever years old it is. But nonetheless, once again, really not good right now. We are experiencing a bear market like we haven't seen before, at least in terms of price drops. This is obviously the highest price drop we've had. It will continue to be the highest price drop cycle over cycle after cycle as we move up. But nonetheless, we have broken market structure, which is very much something that is super, super bearish. Now, in my opinion, the first pit stop should be roundabout where the Bitcoin CME gap is. So if we load up our other chart, let's come over. So on the 300 week down here at 16,000. So if we come over to the Bitcoin CME gaps, what you will notice is the next CME gap that we have. If we hop over to the daily time frame, so you can see it a little bit better. We've got a big CME gap from down here, December 2020, that we never filled. And at this moment in time, this CME gap is residing at 18,500. Now, once again, I made a whole video about this price target. I've been talking about this in my streams, but first leg to the downside is going to be another 10% drop from where we are right now. In my opinion, 18,500 is probably the most conservative price target that you could have for this market cycle at this moment in time. The next leg down would be your 300 week, which historically has always been the bottom, even in the face of black swan events and massive amounts of fear, uncertainty, and doubt. So honestly, I would really want to see 16,500 hold, because I think if we start sliding below 16,500, at least based on my TA, the only other thing that we would have is to come back down and fulfill this Elliott wave theory. So if we hop over to the Elliott wave chart, you can see, you know, from our cycle low, let me put this on a log scale. From our cycle low down here, we bottomed after having an ABC correction into the 2018 bear market. You had your 1 impulse, 3 impulse, and 5 impulses. That was the top of your 1, 2, 3, 4, 5 bullish impulse. And we are currently residing in that ABC correction. We've already had the A, we had the B correctory wave, and we're sitting in the C right now. So as you can see, if we look at these minor waves, you've got your 1, 2, 3, 4, 5, ABC correction, 1, 2, 3, 4, and we are in the 5 wave. I've been talking about this. This is going to be a super bearish wave. And while Elliott wave theory is somewhat ambiguous as to the exact price target it's going to be at, Elliott wave theory doesn't really tell you the exact price target we would be looking at. However, what we can say is, you know, if the Elliott wave theory was to hold up, then we should be bottoming above the 1 wave, which is around about 14,000, which isn't 100% impossible. And bear in mind, I'm not predicting 14,000. What I've personally been predicting is I've been saying filling the CME gap is an inevitability. I don't even think it's going to be like, okay, we might do this. So I do think we are going to come down and fill the CME gap, which once again is at 18,500. That is my next pit stop. Once again, the 300 week is what I'm looking to target. I do find it quite hard to believe that we would be closing weekly candle bodies below 16,500. Have to emphasize that, weekly candle bodies, because yes, I really wouldn't be surprised if we had a quick wick down to maybe 15,000, 14,000. If we come down to 14, we'd fulfill the Elliott wave theory, and if we put a weekly close back above the 300 week, I do imagine we'd be having a big bounce coming in, even if I do not think the bear market is over in its entirety. So a couple of price targets for you, a little bit of food for thought. Like I said, market structure is currently breaking over on the Bitcoin price. So I will be doing some updates later. I think I'll be looking at how Bitcoin is performing against the M2 money supply. So when we're accounting for inflation, we're already back down at the 300 week, which was very interesting. So that's all I've got for you today. Hope you enjoyed today's content. As always, Cowboy out. Peace.